Hello guys and welcome back to another video in my channel, Srida Trading Moves. So thank you so much for the support I've been getting through the past few days. It was great to have you all last week and discuss how the market is going, especially in today's market conditions. And yes, as you guys know, I'm always live at 9:20 New York time. So please make sure to join, and there we share a lot of important and great tips about how to trade, and we cover everything. Also, we do trading together on the New York morning session, and we enjoy our time together there. So if you have some time around 9 a.m., please do make sure to join my live stream. And all right, so in this video, we're going to talk about last week because I feel like a lot of people are misunderstanding what actually happened. If you look, if you just look at the indexes, you'd say, okay, nothing crazy. But if you were actually in the market, trading, watching flows, watching individual stocks, you would understand that something is wrong. And it wasn't a crash, but it also didn't feel like the same strong market we've had recently. And that's what I want to break down, because this is usually where people get caught off guard. So on the surface, everything looks fine. The S&P is kind of going down, but not so much. We hit the last support zone, and also we can see a Nasdaq not collapsing, but underneath, there's completely different stories happening. We start noticing things like some stocks are still going up but slower, some names just stop reacting to good news, and others drop for no real reason. And when that starts happening, it usually means one thing: the market is losing momentum. Not reversing yet, but definitely slowing down. So let's talk about the big names, because that's what driving everything. Apple not really pushing anymore. It's just kind of sitting there. NVDA is still strong overall, but way more volatile because it was straight up. Now it's like up, down, fake breakout and pullback. So we can go and check out. Okay. So as you guys can see, we have a lot of corrections happening here. It's sort of 170 getting rejected every time. And well, let's go to Tesla next. This honestly just looks so lost, like no real direction. But this could be a potential for a pullback today. Let's see what's gonna happen in today's market. Also, Microsoft could be the cleanest one. That's what I saw last time. It's better than most. Action like the safe tech play. Amazon is makes it not clear, it's like collapsing. So what does this tell you? Leadership is not clean anymore. And when leadership starts getting messy, the whole market becomes less predictable. Now, let's talk about why this is happening. Because this is the part people usually ignore. First of all, the interest rates. The market is still trying to figure out when our cuts actually coming. And every time expectations shift, even a little bit, impacts tech. Because tech is very sensitive to rates. Second is positioning. Let's be real. Everyone is already in the same trades. AI, NVIDIA, and big tech. These are crowded trades now. So even if the story is still bullish, you need new money to keep pushing prices higher. And that's where it gets harder. Third, profit taking. This one is simple. Funds made money over the past months, and now they're just taking some off the table. That doesn't mean bearish, it just means the easy money phase is over. And this is where it gets interesting psychologically, because retail, a lot of people of us are still very bullish. They're buying dips, still expecting new highs, but for the smart money, they're kinda a bit more cautious. Not panic, but just more selective. And when you don't have that kind of divergence, the market usually becomes choppy, slower, and more unpredictable. So, what are the warning signs I personally saw last week? Well, first of all, breakouts not working as well. Because before a stock breaks out, it just keeps running. But now, it breakouts and then pulls back, as you guys can see here. And in many different stocks, like let's go back to the S&P 500, for example. So it's breaking down, but it broke the last support zone here, but the market is still going down. And it could pull back at some moment. Second is the reaction to news. Good news isn't pushing stocks as much anymore. And that's a big one, by the way. And third, fewer stocks participating. It's not broad anymore. It's just a few names holding things up. So overall, last week wasn't bearish, but it was a transition from a strong trending market to a market that's starting to question itself. And usually, this is where the big next move gets prepared. So we just don't know the direction yet. And that's why I am asking you guys to be more cautious in today's market conditions, and especially with the geopolitical tension we have going on right now. So I hope this video was helpful, guys. I wish you a great week that's ahead of us for trading. So good luck to you all, and thank you so much for watching this video.